All right, what up, everybody? This is Jeremy with Escape Velocity Trading coming at you for the first market bias update report for 2025. Today is Sunday, January 5th, and let's dive right in. Starting off reviewing the trading activity from last week. As always, I had a few trades in 2024's trading journal, so they are not shown here. Ended up having a couple of wins there and a couple of wins here, along with a couple of losses. Total ended up losing 1,412 from the trading activity that you can see here on the screen. And then also had a gain of 6,800, or excuse me, $6,082 from the trades previous to this, but still within the same trading week in the last few days of 2024. This led to a total gain for the week of 4,669.50 cents, with 5 wins and 2 losses over 7 total trades. So with that, let's dive into our chart analysis. Looking at the S&P, symbol SPY, we are in a very interesting situation. Right now, the RSI is in bearish territory on the daily chart. Our MACD is in bearish territory, and we are below the 50-period moving average. Now, on Friday, we pushed up higher and tested right into that 50-period moving average, but could not reclaim it. Now, if we drop out and look at a weekly chart and zoom in here, you can see that that price bounce came in right on the 20-period weekly moving average, which is what we were expecting to see. We are between that and the weekly 9 now and struggling to hold on to support. Our RSI is decreasing on the weekly as well, and the MACD is also decreasing. So this leads me to believe that if we break that 580 level on the S&P, that will confirm a short-term downtrend. And the likely scenario, if that is a price drop to 565 down to probably 550. So that is the zone that I am personally looking at for potential short opportunities if we break below 580, shorting down to 565 to 550. Going out to the Nasdaq, this is a very, very similar story. If we zoom in still on the weekly chart here, the MACD and the RSI look very similar to the S&P, but we didn't quite test that 20-period weekly moving average. So for me, if we break down below the weekly 9 here, which is at 515, that will likely signal that we are going to drop down and test the 20-period weekly, which is down at just shy of 500. So about a 15-point potential drop there. Going out to IWM. IWM has been a little bit more chaotic, and if we put this out to a daily chart, you can see that we came down, nearly tested the 200, but didn't. With this is anybody's guess as to where it wants to go next. I would expect that if the SPY and QQQ are able to hold ground and just consolidate sideways at the beginning of this week, that we will likely see a rally on IWM back up to the decreasing 20, which is around 228. If the rest of the market does stumble, I would expect this to roll over and come down to about 215. So working within that probably 12 to 15 point range on IWM. If we drop this to a weekly chart, you can see that a drop here, if we did break, would come down to about 212 to test the 50-period moving average, which correlates pretty well with that 200-period moving average. It's only about 2 points difference on that. So that 212 to 214 area is where I am expecting to eventually end up over the next week or so on IWM. Going out to Dow Jones. Dow Jones had a significant sell-off over the last couple of weeks. Last week and a half or so has stabilized. It is oversold to the downside on the RSI. The MACD is in bearish territory, but is starting to stabilize a little bit. I would not be surprised to see this come back up to the decreasing 20 or the flatlined 50 and give a retest there, but I'm not going to be interested in going bullish on this until we are above 436. Otherwise, looking at the bearish case, if we break down below the lows here on the daily chart and we put that back out to a weekly time frame, that would be a confirmation below our 2 shorter term moving averages. And at that point, I would probably be looking at a further drop down to about 405 to the 50-period moving average on the weekly chart. Drop this back to a daily, go out to IBIT, which is the Bitcoin ETF that I track. We broke down, got below both of our moving averages. Our 9 EMA crossed below the 20. The 20 is flatlining, and on Friday at least, we poked our head back above it, but couldn't hold above it, and we closed right at that 20-period moving average. So right now, it is going to be a very, very important next day or two for Bitcoin, the next 48 hours especially, to see if we can get a daily close on Monday back up above that level. And in doing so, allow some time to develop for this 9 EMA to creep back up and cross back up above this flatlining 20. If that occurs, it is now leaning more bullish, and I would be expecting to come back up to the all-time high here of 61.75, if not beyond. If we fail that, however, and come back below the last two candles lows, I'm just going to call that 54.58 or 54.60. If we drop below that, moving back down and retesting the 50-period moving average would be my likely scenario. And if that does occur, that would be a very, very important price line for Bitcoin to hold. If it doesn't, that would basically signal a top, and we would probably be seeing decreases back down into the 45-ish level on IBIT. Going out to Ethereum. Ethereum showing a little bit more strength in terms of its bounce off of the 50 here, but it is overall slightly more weak, in my opinion, than Bitcoin is, just simply because we did basically get our 50-period test already. And if we drop this out to a weekly chart, we did get back above the 9 EME here, but we have a little bit of distance to go to hit that 20-period weekly moving average. So I'm a little cautious on this. On the daily chart, if we do get back above and get a daily close above the 20 SMA, I will consider that confirmation for the next leg higher and be interested in playing that. But it needs a little bit more work, and I'm going to definitely be looking for a daily close above the 20 period before I get bullish on Ethereum. Now, going out to our sector ETFs for the broad market, if we go out to the basic materials sector, this is breaking down from a little bit of a decreasing triangle or low base here on the daily chart. If we toss that out to a weekly, you can see that we are actually breaking below the 200-period moving average. That is not a great look. We are overextended to the downside, so it seems to me like we could see a bit of a bounce here, maybe pop back up above the 200, come back up to the decreasing 9 or even the flatlining 50 here, but I'm not going to be holding my breath for that. I have a feeling that the market is in for a bit more of a correction over the next couple of weeks. So if anything, I am looking potentially to take some short opportunities in basic materials and not playing to the upside quite yet. Going out to consumer discretionary, bounce on 50. If we break back above our diagonal resistance line there and back above the 20-period SMA at 231, we are overextended to the downside, so that could give a little bit of a reprieve rally. If we drop this to a weekly chart as well, you can see that we are still defending the rising 9 EMA, so it hasn't done anything wrong from a trend perspective on the weekly chart, but it is going to be very, very important that we hold on to this 50-period moving average and the price level of about 219. If we do violate that, I would expect further declines to come in consumer discretionary, and that would be an area that I would potentially be interested in starting to short. Going out to tech. Tech basically just going sideways, trapped in a range here for quite some time. Whichever way this breaks is the direction that I will be interested in playing it. Right now, it is right in the middle, kind of in no man's land. All of our moving averages are a bit of a mess on the daily chart. If we drop this to a weekly chart, you can see that we are actually still holding the 9 EMA. We got our close back above it after testing all the way down to the 20. But with that said, because of this kind of choppy range on the daily chart, I am just not interested in making a decision one way or the other here yet. I will be waiting for either a breakout of the 241.88 high or a breakdown below Thursday's low of 229.78 cents. If that break to the downside does occur, I would then be looking to short basically down to the 220 or 221 level. Going out to XLE. Energy sector here has been severely oversold. We've got a little bit of a reprieve bounce. If we toss this out to a weekly chart, though, you can see that we are below all three of our averages, the 9, 20, and 50 period moving averages, and we have some room to go before we get down to our support level at the 200 period moving average, which correlates pretty well to some of the pivots here that we had back in 2023. So for now, I am a stay away on energy. It has bounced too much on the daily chart to feel interested in playing the dip, but I'm also a little worried of it rolling back over here. So I am going to be ignoring XLE moving forward here for the next little bit and waiting for it to clean up and give a little bit more direction. Going out to XLU. On the daily chart, we actually had kind of a double top here, broke down below the pivot low, which you can see here. And now we've kind of broken back up, testing, trying to get back above that level. That is going to be a really, really important level to hold. But even if this bounce continues, we only have a short bit up until the 50, and the 50 is now rolling over, which is not a great look. If we toss this out to a weekly chart, you can see this is actually a double top M for murder topping pattern right here. I do expect further decreases in utilities, and I would be targeting back down to the 72 or 73 level. Going out to consumer staples, very similar to utilities, we have kind of a double top or a decreasing double top here. We are sitting at the 50 period moving average, which is a very, very strong support level. You can see that with all of these price tests moving back all the way to 2022. With that said, I'm not going to be shocked if that breaks and moves lower. If we toss this back to the daily chart, we are below the 200 already. So shorting below the low of this consolidation pattern here makes some sense to me, especially if we get 2 or 3 more days of consolidation before that break so the RSI can come back out of the oversold territory. Going out to communications. Communications holding on to the 50 period moving average. We've had several dojis here in a row where price has just not known what direction it wants to go. We are overextended to the downside on our RSI. We are in bearish territory on the MACD. We have broken our diagonal support line, which was about right there from the last trend. So now we are in a kind of consolidation, no man's land, trying to decide if this is just simply a consolidation period before resuming an uptrend, or if this is the start of something more significant to the downside. If I had to place a bet on this, which I might, it is probably more of a shorting opportunity than a bullish opportunity. If we toss this out to a weekly chart, you can see we've had a huge, huge run here over the last 2 years. And it makes some sense to maybe have a little bit more of a correction. I would probably be shorting a break of the weekly 9 and then moving down to about $93 or so as a target 1, then probably down to $90 as a target 2. And on the weekly chart, I can see also that we are still overextended to the top side on the RSI, and our MACD is starting to roll over and signal potential top. So I am looking for potential shorting opportunities in the communication sector. Going out to industrials. Industrials below the 9 and 20. 9 is about to actually cross the 20 in a bearish fashion. We're right in the middle of no man's land on the RSI. Our MACD is in bullish territory, but we've gotten a cross signaling some caution is warranted. If we toss this out to a daily chart, you can see we have our support level here from the 200 period moving average and some previous price pivots out here back a few months back. So I am not confident enough to short this thing right now, but I'm not going to be playing a bounce on this either. This needs more time to develop. Going out to XLF. This is the financial sector. We have crossed back out of overextended territory to the downside, have a little bit of a bounce. I am expecting resistance to hold around 49 or 49.25. I don't think that we are going to see a V shape here and have prices come back up to the highs. This probably needs more time for any development on the top side. For development to the lower side, just playing a break below the consolidation zone here, and then moving down, targeting basically the 200 period moving average and the pivot lows from back here in September. Going out to XLV, this is healthcare. We have been in an established downtrend for the last several months. If we toss this out to a weekly chart, you can see we are approaching the 200 period moving average. I wouldn't be surprised for that to act as support for us to break back above this diagonal trend line and to retest the lower side of the 50 period moving average on the weekly chart here up at 146. But this will probably take a few weeks to develop. For right now, it is a stay away for me just based on the fact that we have support down here just under current prices on the weekly chart. But on the daily chart, we are below all of our moving averages, and some of our longer term moving averages are actually starting to curl over, which is not a great look for the bulls. This has some significant work to do to try to regain its footing for any bullish momentum. Right now, it is a stay away for me or potentially a shorting opportunity if we get some big pops and then momentum stalls out. But for right now, I'm probably avoiding this sector. Going out to real estate, we have a nice little low base here forming, stuck between the 200 period moving average and the lower end of this consolidation range. If we toss this out to a weekly chart, you can see if we break the lows of that, we actually have no more moving averages below us, and we will likely have broken, yes, we will have broken the diagonal support on the weekly chart as well. So I would actually be interested potentially in a short opportunity on XLE, probably targeting down to 37.5 and then probably down to about 35. Checking that on our daily charts, yeah, we have no moving averages down below, so 37.5 and then 35 would be targets to the downside if we break the lows of this recent consolidation. Going out to gold, gold is in a bit of a pennant formation. On the daily chart, it has a rounding 50 period moving average. We are underneath. That is not a great look. To become bullish on this, we have to break back above the diagonal resistance line here on the daily. If not, probably coming back down to the 200 period moving average around 230 is the likely scenario. If we toss this out to a weekly chart, you can see here that if we don't hold this level, the 9 is going to cross below the SMA, the 20 SMA here, and that is not a great look, and it is lookout below on that, probably coming back down to about 225. So somewhere between 225 on the weekly or 230 on the daily would be my price target for gold in the short term. Now, on the long term, I am always a gold component. I support gold. I think gold is a great asset to have in your portfolio. So I'm not necessarily going to be shorting gold, although sometimes I do. For now, I'm just going to be writing covered calls on positions that I have and locking down my risk graph, trying to profit a little bit through cash flow while I wait for the longer term trends to reestablish themselves. Going out to silver. This is the daily chart on silver, and you can see that we have broken down. We now have a diagonal resistance line built. If we toss this out to a longer time frame on a daily chart, you can see that we have a little bit of a diagonal channel here that we are sitting right at the lower portion of, with this being the upper bound, this being the lower bound. If we break here, it is kind of a lookout below scenario for a little while. We are testing basically right at the 200 period moving average on the daily chart. If we toss this to a weekly chart, we are sitting right at the 50 period moving average. So if we break the 50 period moving average, let's just call that $26. For me, target 1 would be down to 24. Target 2 would be down to about 22.75 for potential shorting opportunities. Finally, going out to the US dollar, this is a weekly chart. We have been in a significant bullish trend for the last few weeks or a couple of months, actually, ever since testing down onto the 200 period moving average. We broke out above this previous resistance zone that is now hopefully going to be acting as support if you are bullish on the US dollar. I do not like the US dollar being bullish because that tends to put pressure on the rest of the equities market. So we would love to see this come back down, retest that level, and hopefully break down. But right now it is leaning nothing but bullish. Let's go out and check out our 1 week FinViz heat map here. You can see where money is moving in and out of the market over the last week of trading. You can see big decreases in a lot of the big name tech stocks that have been high flyers over the last year or two. It makes some sense for profit taking and rotation out of these areas of the market. So I am expecting that trend to continue. And if we go out to our Forex Factory to look at important economic data coming our way over the next week, you can see we have a busy, busy week. Monday and Thursday, there are no reports, but Tuesday, Wednesday, and Friday are jam-packed. So if you are trading, make sure you know about these important reports and avoid them if you are short-term trading, and just tighten up your stop losses if you have profit to protect, and protect yourself from downside risk for any swing trades or position trades that you might have because of this data. So with that, guys, as always, trade safe. Let me know if you have any questions, and I will catch you next week.